Welcome everyone to today's session on buy or buy, and we're going to talk about this Singapore company called Vicom. All right, this company called Vicom. So before I continue, okay, let me just share with you how I'm going to just go through the whole series for today. So first of all, I want you to go through this thing called Big Profit. And Big Profit, basically, I'm talking about the background of this company. I'm talking about the industry that it is in, some of the key facts. Then I'm going to talk about the growth factor, okay, be it the company as well as the industry as a whole. Next on, I'm going to talk about some competitor, whereby we talk about peer comparison. Moving on, we talk about some of the risk of this company, and of course, what are some of the opportunity that are available. And lastly, we're going to talk about the financial fitness in terms of the numbers, how good or how bad this company is. But once again, before I even move on, I just want to put on a disclaimer. Okay, I just want to have a disclaimer over here that whatever I share today is purely educational purpose. All right, so if you actually want to go into this company, please go and do your own due diligence as well. Please do your own research. Okay, and we're not going to be responsible for any losses or any gains. Whatever money you make, it is all yours. So with that, if everybody is okay with the disclaimer, accept the disclaimer, can you just type in a 1, 2, 3, 1, 2, 3? Okay, just gonna make sure that everybody accept the disclaimer before I can go on, and then I can all out and share all out whatever I wanted to share today. Can you just type in a 1, 2, 3? Can't hear. Okay. Okay, so let's get started. So the first one that I'm going to talk about is, of course, the background of this particular company. So with that, I actually cut a small video for you guys. So we'll start with a very, very short corporate video on Vicom. So sit back, relax, and let's enjoy this very short video.
Daddy, what's Vicom?
It's a company that inspects all kinds of vehicles. They have accomplished a lot over the years.
Since opening our doors, we have built a stellar track record for efficiency by being able to handle large volumes of inspections each day. We soon expanded our operations to multiple locations across Singapore. Over the years, we have become a leader in emissions testing to help curb air pollution. Till now, Vicom has inspected over 10 million vehicles, helping to ensure a safer and greener future. Vicom is able to inspect all categories of vehicles running on petrol, diesel, hybrid, and electrical power. Vehicle checks help to safeguard brake effectiveness and the smooth functioning of steering and suspension systems. The exhaust emission testing we provide measures and helps to moderate emission levels. Our inspection process carries out checks on tires, seat belts, headlights, and direction indicators. There are even thorough inspections of a car's undercarriage and wheel alignment system. For the convenience of our customers, you can renew your motor insurance and road tax renewals. The Vicom Emission Test Laboratory, or VETL, is Singapore's first state-of-the-art emissions and fuel efficiency test laboratory. It is also the first of its kind in Southeast Asia. We measure the levels of different pollutants that affect climate change to help lead Singapore on a path of environmental sustainability.
So this is a very, very short video. So if based on the video, if you basically understand where this company, what this company do, can you just put in a heart shape? For those who are on Facebook, can you just click on the heart shape? And for those on Zoom, can you just type in HEART, HEART? So for those who are driving a car, basically, I'm sure that this is a company that don't really need further explanation. Definitely every car owners will have to go through the car inspection either with Vicom, or there will be another company that also do car inspection as well, which later on I will actually touch on it. So first of all, let me just share with you some of the background of this company. So this company, Vicom, it is actually a subsidiary of ComfortDelGro. And ComfortDelGro, definitely all of us will know this particular company. So you can see based on the bottom that this company is 67% owned by ComfortDelGro. So ComfortDelGro is the majority shareholder for Vicom. And then moving forward, under this Vicom group, there is actually three main branding. So the first one is Vicom itself. The second one is JIC Inspection Center. And of course, the third one is this one called SETSCO Services. All right, so all this will be part of the Vicom group. So this is basically the picture for those who actually go for inspection. I'm sure you will be familiar with this. So the above is Vicom for Kaki Bukit, and of course at the bottom is JIC Inspection Services. So first of all, we can see that for the first one, Vicom, okay, it is actually spread pretty much across Singapore. Okay, for the north, you have Yishun. For the central, you have Xingming and Kaki Bukit. And on the right-hand side, you have the Changi North. And on the west, you have the Vicom Inspection Center. And subsequently, there's also the JIC, okay, which is extreme west, as well as in the center. So they are pretty much, spread across Singapore, so that, as a driver, if you want to go for your car inspection, it's actually very, very accessible. So you can see for Vicom, they are actually the pioneer in vehicle inspection. So they are the first in the world to employ a computerized and integrated vehicle inspection system, more than 25 years ago. So whatever you see over there when you do your car inspection, it is actually a state of the art, back then when 20 over years ago. And a lot of companies, a lot of countries actually learn from Vicom, when it comes to vehicle inspection. So up till now, okay, in fact, over 400,000 vehicle checks is being conducted annually. So every year, 400,000 cars actually went through them, and 35,000 car evaluation, and ongoing and still counting. So this is just purely on the vehicle inspection portion for the business. So next, I'm going to talk about the non-vehicle inspection business as well, okay, which is actually this arm called the SETSCO. So SETSCO forms the Vicom non-vehicular inspection and testing arm. So what do? Basically, this particular segment, they provide testing, calibration, inspection, into different area, different industry like aerospace, marine and offshore, biotechnology, oil and petrochemical, building, construction, and even electronics manufacturing industry. So they are dealing with more on the testing side, and inspection. So this is, of course, the brochure, okay, that I actually extracted from SETSCO itself. So you can see mainly they touch about product and certification, training and personnel certification, mechanical technology division, construction technology division, as well as the biological and chemical technology division. So now let's talk about some of the challenges with regards to this non-vehicular business, because a lot of us are familiar with the vehicle inspection portion of Vicom, but this particular portion is slightly that is less well known. And what happened is that, in fact, they actually moved office. So the new building for this SETSCO is actually going to be in Bukit Batok at the end of 2020. And of course, we can see at the last paragraph, it is expected to remain challenging as the Singapore economy is expected to be negatively impacted by the COVID-19 outbreak. So this particular business segment is actually affected because of the COVID-19. But when it comes to the inspection, the vehicle inspection, you realize that even when we are all quarantined and things like that, your car, if it's time for inspection, you still have to send it for inspection. So the business on the car inspection side, it is basically the solid part of this particular Vicom group, right? And for the non-vehicular right now, they will be facing some challenges. Next, we look at the industry. So in terms of Vicom, why are they so powerful, or why are they so strong? It's because you realize that Vicom dominates 73.9% of the vehicle inspection market. So you can see total, there was 600 over 1,000 cars in Singapore. vehicles, 600,000 over cars. Vicom is servicing 462,000, which form the 73.9%. So they basically are the main car inspection and vehicle inspection for Singapore. And this percentage has been pretty consistent. In fact, it has increased last year slightly, by about 1%. So of course, we want to also understand, what is the charges like? What is the fees like to actually service a car? So for those who are non-driver, okay, this is something for you to understand. And also how often, as a driver, do we have to service or go for inspection for our car? So this is the inspection pricing. So you can see that based on the frequency of the year, which means that how old your car is. So for 3 years and below, you don't have to go for inspection, but for your car between 3 years old and 10 years old, you need to go for biannually, which means that every 2 years, you need to go for one-time inspection. Okay, I repeat, every 2 years, you need to go for one time. So things to take note is that if your car is more than 10 years old, so we know that Singapore car, the moment we buy a new car, you will have a 10-year COE. So basically for those who actually renew the COE, that means your car is more than 10 years old. Okay, because your car is relatively older. So that is why they need to make sure that, your car remains solid. So the inspection from biannual, which is once every 2 years, it increases to once every year. So annually, if your car is more than 10 years old, every year you need to go for car inspection. How much is the fee? You can see on the right-hand side is $64.20 for cars. So same thing for private hire cars. You can see that it is 3 to 10 years old is biannually, and more than 10 years is actually annually. But later on, I will actually share more that actually there was a new ruling that for private hire cars, okay, there's a new rule that you have to go for annual inspection. Okay, so private hire car has to go for annual inspection. So these are also some of the additional fees that this company can actually offer, okay, to actually generate the revenue. Okay, but I would say that the main bulk actually comes still from the car inspection area. So all this is just for your reference. So now this is a question that I actually asked myself while I was doing this particular analysis. Okay, because we know that nowadays the trend is moving towards electric car. So I asked myself, does electric car has higher fee? That means, is Vicom able to actually charge more, as the trend move towards electric car? And then I realized that, the inspection for electric car is actually lesser. Okay, reason being electric car has less mechanical parts. So which means less wear and tear. So when it comes to inspection, when you have less wear and tear, it means that there's less inspection that is required. So in fact, right now, okay, whether is it a hybrid car or is it a normal car or is it an electric car, okay, the charges are exactly the same. In fact, electric cars actually require less inspection. So in the future, when there is more and more electric car, will the price for electric car reduce? We are not sure, but again, the company can say that, hey, because this is something that is new, the price is going to be even more because you're a minority. I have to come up with some of the machines just purely for your electric car. So that depends on how the company actually move on from there. Okay, now it's actually this wow thing that I just wanted to share with you guys. So let me just read. So basically, Vicom actually worked with this credit card company called Diners Club. Okay, Diners Club, to come up with the Diner Club and Vicom co-brand credit card. So at the bottom, you can see the CEO of Vicom, Mr. Sim Wing Yu, actually mentioned that Vicom is pleased to be the first inspection center to offer its prepayment online portal service exclusively for Diners Club members as part of our collaboration. So why did I actually put this particular sentence? Is because this was actually one of the press release that was released, I think last year, back in 2019. So in fact, I placed this is actually more of a joke, okay, because you realize that nowadays, right, everything is done electronically. In fact, 3 hours ago, when I actually ordered bubble tea online, I paid online lah. So technically, I would say that, you know, even buying bubble tea nowadays is already pre-payment done, and then they will deliver the bubble tea to me. So I just find that, you know, even for a simple thing like this, you know, whereby they are offering prepayment and they actually create such a big press release, it was quite funny. It was quite funny just in my own opinion. You know, but in short, I just find that nowadays every company has prepayment. Every company has the payment system shouldn't be an issue. So again, this is nothing fantastic about the company. I'm just quite amazed that the company make it so much so that this seems like a big deal to them. So now let's talk about the 2020 outlook. Okay, so we know that right now we are in the midst of a recession with the COVID-19 ongoing. So of course we can see that over here they mentioned that the non-vehicle testing business is expected to remain challenging given the economic uncertainties, which I have elaborated already beforehand. So one thing to take note is that moving forward, remember just now I mentioned that for renewed COE, what happened is that the frequency of your car inspection actually increased. So what happened is that you can see over here more than 41,000 private vehicle actually renewed their COE in 2019. Okay, and this is actually a rising trend, which means that more and more car owners are holding their cars or owning their cars for more than 10 years. So when more car owners are owning their car for more than 10 years, it actually means more revenue for this company, you know, because from every 2 years I earn one time of your money. Now every year you need to give me, you know, money for inspection. And of course, at the bottom, you can also see that, you know, in this new bill, okay, based on July 2020, new safety requirement will introduce, and all private hire will need to undergo yearly periodic inspection regardless of vehicle age. So as long as your vehicle is used as a private hire car, okay, again, you have to go for yearly inspection instead of, you know, biannually, which is once every 2 years. Okay, mainly because, you know, the usage of the car is a lot more and you're using it for commercial usage. So again, for this particular company, they will be able to benefit from it. So moving forward with this news is actually a good news for Vicom itself. And then I'm going to move on. So we want to look at the trend also, okay, for this particular business. So the trend of the vehicle trend will actually directly impact how the business actually perform. So first of all, we can see that the number of total number of vehicle in Singapore actually reduced. Okay, total number of vehicle in Singapore actually reduced year after year. And we can see that the vehicle cars has a reduction as well, you know, but a rise in private hire cars. Okay, private hire cars actually increased. So which means that this is a good news for Vicom. And moving forward, taxis has dropped. I wouldn't say significantly, but it's easily about 20% of their business. Okay, the number of buses has increased. So the government is also pushing out a lot more buses so that the transport system can be more efficient. And we talk about goods and other vehicle, it has also increased slightly. And the last one is the number of motorcycles actually reduced. Okay, the number of motorcycles actually reduced. But I'll say that a few things to take note. Number one is that the total number of vehicle in Singapore as a whole, be it cars, be it motorbike, be it buses, is decreasing. Okay, it's decreasing. So that means less money for Vicom when I talk about the overall ecosystem, the number of vehicles. You know, but the good thing is for private hire, it actually increases. So which means that, you know, all this car has to go for more inspection, and that would actually leads to more revenue for Vicom moving forward. So now let's talk about the growth factor of this particular company. What are some of the potential growth? So first of all, this is a very major news. In Singapore, in 2018, they released that Singapore will have zero growth rate in car population. Okay, what does it mean? It means that the number of cars in Singapore, or the number of vehicles in Singapore in total, will actually remain at 0%. In the past, you can see previously, the number of cars in Singapore actually can increase by 0.25%. You know, but right now, the government has come out with a rule. In fact, this was actually back in, I think, 2018, a few years back, is that it's going to cut at zero. So which means that every year, the number of cars, the number of vehicles in Singapore is going to be the same or is going to reduce slightly, and it's not going to increase. So in terms of growth, in terms of the vehicle number, definitely I would say that this is not a good news for Vicom, okay, because they will be able to make more money when there's actually more cars on the road, because more cars means more inspection. So if the government has a zero growth, which means that they have to find ways to squeeze out more money, okay, with the same amount of vehicle on the road. So it's going to be slightly more challenging in terms of the growth for this company. Next, we look at the peer comparison. Who are the main competitor of Vicom? So there's actually this company called STA Inspection Private Limited, okay, Star Inspection Private Limited. So in Singapore, they have, I would say, three main branches. So again, like I said, they dominate only about 20% of the total car population or vehicle population in Singapore. So again, they are the smaller player. Okay, they are the smaller player, and this number has stayed pretty much stagnant throughout the years. Now we look at the risk of this particular company. I think that is also something that is important. So just now I mentioned that right now we are at zero growth rate, and what happened is that the government has mentioned that in 2020 they are going to review, the vehicle growth rate, okay, whether to remain it at 0% or maybe to increase it, or in a worst case scenario to even bring it to a negative vehicle growth rate, which means that total number of vehicles in Singapore, they can actually reduce slowly. So of course there's many implications for that, but again, right now this year the government is actually going to renew. So I believe that after the COVID-19 lockdown is over, like for example, right now the COE is also not running. Okay, there's a total halt on the COE on the bidding process. So very likely after the lockdown is over, that is where the government will also start to release, whether are they going to keep it at 0% or they might even reduce. So the moment they reduce, I would say that it is definitely going to be a bad news for this company, Vicom, because the overall vehicle population is dropping. But again, there is opportunity for this particular company, which I'm going to elaborate and share with you guys. So first of all, although there is a same amount of vehicle, or rather zero growth, but at the same time, like what I mentioned just now, there's an increasing number in renewed COE. So what is the key difference over here? Okay, the key difference over here, you can see that more renewed COE car equal to more money for this company. Why is that so? Okay, it's because I have mentioned for cars that are more than 10 years old, you need to go for inspection once every year. Okay, as compared to a car that is between 3 years old to 10 years old, you only need to go for inspection once every 2 years. So I have a very, very short, quick analysis for you that from biannual to annual, if let's say there is 10,000 additional renewed COE, which means that originally this 10,000 car, they only need to go for inspection once every 2 years. But right now, because they have extended into a renewed COE, so basically for this company itself, they will have an additional 10,000 cars that has to be inspected. So additional 10,000 number of cars. So if we multiply by the cost, okay, that means the price to go for inspection, that will easily mean an additional 642,000 for that particular year. So we can actually see that right now there is actually a trend of increasing number of renewed COE. I would say that I'm not sure whether is it because linked to the number of luxury car, but I realized that for people who are, for example, people who are driving a Mercedes, BMW, or let's say a Porsche, very likely more than 90% they will actually extend it. Or even for the second-hand dealer, when they buy the car, when they get a car, they will actually use the car for more than 10 years. So you can see that most of the luxury car, Mercedes, BMW, Bentley, Porsche, even Ferrari, Lamborghini, many of them, they're actually more than 10 years old. In fact, many of them, some of them even use for 20 years and beyond. So that would actually means that every year they will actually need to go for inspection. So next up, what are some of the areas whereby this company can actually generate, more revenue, because more revenue means more money. So we can see that Vicom, okay, the Singapore leading provider in vehicle inspection, is partnering with Direct Asia Insurance, okay, the #1 direct motor insurance, to provide a one-stop insurance solution for individual vehicle owner at its vehicle inspection center. So very simple. Basically, when you go for your car inspection, at the same time, they will ask you, hey, do you want to buy your car insurance? All right. So you can basically do everything over there. So it's like a one-stop insurance solution for you. In fact, previously, I have actually talked to quite a number of friends. They actually work in the car workshop. They actually share with me that the insurance offered at the Vicom inspection center, it is cheaper. Okay, it is cheaper. I'm not exactly, I have not personally checked it out, but they actually share with me that if you actually get your insurance over at the Vicom inspection center, the rate is super low, okay, compared to outside. So which means that, because you can see that they already secure 400,000 vehicle that has to go over there to inspect. So which means that, if they can convert, a portion of them, let's say 20% of this vehicle, to actually buy the car insurance over from them at Direct Asia, so that will be additional revenue that this company can actually generate, just by adding this additional service, which, by the way, as a car owner, you need to buy the insurance anyway. So if they are able to offer a good pricing, I would say that many people will actually just go there and buy it. After their inspection, they apply for their insurance at the same time, and then they can renew their road tax. So this is something that I find that there's definitely huge potential for Vicom. Okay. So now we look at the financial fitness for this particular company. That is where I would say that this company is really strong in terms of the financial. So these are basically the 7 financial check that we will be looking out for. #1 is growing revenue. Second one is positive earnings per share. Then we look at the cash flow. The cash flow must be positive. And then moving on, we look at the return on equity. It has to be more than 15%. The margin for the business is more than 10%. Interest coverage more than 5. And the last one for this particular company, again, we will be looking at the dividend. Okay, the dividend yield must be more than 5%. Okay, so this is basically the flow chart to explain why we are looking at what we are looking. So again, I'm not going to go in depth into this analysis. If you want to find out what all this actually means, please check out my previous video on YouTube when I share about this company called Zoom. I actually go through each and individual process. So do check out that video. But what happened is that I just want to share with you, based on these 7 criteria, whether is it a pass or whether is it a fail. So let's start with the first one. Is this company revenue growing? Okay, good news. This company, although we mentioned that the vehicle population is pretty much stagnant because of zero growth, but they still manage to actually find ways to squeeze more money. So that is why in terms of the revenue, we can see that this company revenue is still growing year after year. Although it is not a lot, but it is still growing, which is still a good news for investor. And of course, when the revenue is growing, we also want to make sure that the net profit, the earnings is also positive. So again, a good news from this company, it is a pass. Okay, it is a pass. Earnings per share has been increasing year after year as well. Last one is we want to look at the cash flow. How healthy is the cash flow, and is the cash flow actually increasing year after year? Is also a pass. So fundamentally, we can already see that this is a company that is stable, growing very slowly, okay, and the cash flow is healthy. So now, return on equity, we want to look at the management, how efficient they are, using the shareholders fund. So is it more than 50%? Again, this is a pass. So the management actually returns are helping the investor to work very hard when it comes to the equity itself. And the business itself, is it running on a low margin? Is it a low margin business, or is it a high margin business? So why do we not want to go for a low margin business? Because For example, in the case of COVID, suddenly, the customer numbers drop, the revenue drop, if the margin is low, it could eat into your profit. That means your company might fall into losses. But in the case of this particular business, we can see that their margin is actually quite healthy. Okay, we are looking at net margin more than 10%, but this company, they are able to generate a net margin of 27.4%, which means that every $100 you give to Vicom, the net profit that they can make is $27.40. Okay, which is relatively healthy. Okay, which is relatively healthy. And of course, the last one, interest coverage, we want to look at the debt level. Okay, how healthy is this company when it comes to repaying the debt? So now, okay, this is a company with no debt. Okay, with no debt. Okay, personally, I like company like this, especially in times like COVID. You want to avoid investing into a company with no debt. So if you like what you are seeing so far, can you just put in a like, L-I-K-E? Okay, for those who are on Facebook Live, can you just go and hit the heart button or hit the like button, hit the thumbs up button? Okay, if you like the financial of this company so far. Okay, just to make sure that you guys are also still here. Okay, good. I can see that a lot of you guys actually love it. I love it. Okay, this is, yeah, basically all green. But now, okay, I'm going to release the last criteria. Okay, so before I release, y'all make a guess. Do you think the last criteria whereby the dividend yield must be more than 5%, do you think this is a pass or is it a fail? Can you put into the comments below, pass or fail? Let me take a look at your answer. Okay, so Rachel, Edwin from Zoom, and Sing Lee also put fail. Wow, pretty much everybody put fail. Jeffrey also put fail. Melden also put, Jasmine also put fail. What about Facebook? For those who are on Facebook, you can also participate. Can you just type in whether pass or fail? Okay, Jack, I see your answer. Okay, you mentioned that it is fail. Okay, Xiongboon also mentioned fail. Okay, probably you all are familiar. Quite a number of you guys are familiar with this company. So without further ado, let me just release the answer. So for this particular company, when it comes to the dividend yield, unfortunately, right now it is about 4.7%. Okay, 4.6 to 4.7%. All right, so it is a fail. Okay, it is a fail. Now, so again, when I say that it's fail, it doesn't mean that this is a lousy company. This is still a good company. But whether or not to buy them now, I will prefer to actually buy them when they are giving me a dividend of more than 5%. Okay, so how can the dividend be more than 5%, or how is it possible for the dividend yield to increase to more than 5%? Very easy. The share price has to drop. Okay, the share price has to drop. So which means that I'm actually waiting for the price of Vicom to drop slightly, so much so that when the share price drop, the dividend yield will actually increase, and when it reach 5% or higher, that will be a pass for me to actually buy into this company. Okay, so here's some of the financials red flag that I actually caught from this, but for this particular company. So right now, this company is actually giving a dividend payout of 120%, which means that, okay, they are actually paying you dividend that is more than how much this company is making. Okay, they are paying more, how much they are paying out dividend more than how much this company is making based on the recent year of earnings. But again, having said that, I think this company has a track record of paying about 90% of their net profit. That means if this company make 10 million, they will pay out 90%, which is they'll pay out 9 million to the shareholder. So why is it that this company right now, they are actually paying more than 100% of their net earnings? Okay, I think one of the key reasons is because last year, okay, they were actually forced, okay, like in a way asked by the government to shift their SETSCO office from Teban Garden to Bukit Batok. So because of this shift, they were being paid $7.7 million. Okay, they are being paid $7.7 million. So I believe that last year they have actually distributed higher dividend as well because of this additional gain, from this shift of the 7.7 million. I believe that there's still certain surplus. So this company, they feel that we still have certain cash that we are not going to utilize it. So might as well distribute back to the shareholder. So in that sense, okay, I find that this company again, they will actually keep it to something healthy. They will not, give out more dividend, even though the company might not be able to pay off. But one thing to take note is that, okay, so right now they're actually offering more than 100%. So it could be because, like I said, because of the previous additional cash that this company have. So moving forward, okay, what happened is that if this company actually reduce the payout ratio to 90%, so you could see that your dividend yield could also drop. And that is where right now you might be buying this company at 5% dividend yield, but when the company actually drop the dividend payout, you realize that your dividend will also be reduced. Okay, your dividend will also be reduced as well. So this is something for you to take note. So now just to summarize, what are some of the buy factor for me? Okay, what are some of the buy factor for me? The first one is I love it that this is a company with strong balance sheet and very importantly with zero debt. And secondly, this Vicom dominates the car inspection business, okay, with 70% market share. And they have a strong network of more than 400,000 car owners, okay, which I believe that they will be able to come up with more things to extract, from these 400,000 plus car owners. And of course, the last one is that the dividend for this company has been growing, okay, and the dividend yield, I would say that it is pretty decent, okay, although it is still not a pass for me, but overall, I just find that, yeah, the dividend yield is still pretty decent, given that this company is really, really solid in terms of the business and the financial. So those are the three key buy factor for me. So now I'm going to talk about the three sell factor, which is the not so good factor for this company. The first one is the uncertainty of the car population in the future. So like I said, this year, the government is going to release the growth population for Singapore. Is it going to remain at 0%? Or will they actually reduce to negative, or they might revert back to positive? Okay, although the chances of going back to positive, I would say it is pretty low. Very likely it's going to remain at 0%, or they might actually turn it into negative. So this will be higher chances. The next one is, what if there is a new competitor that actually comes in? So a new competitor entry would immediately erode a huge percentage of their revenue. Okay, like I said, right now they are actually dominating. But what if the government decided to let another player actually comes in? So that would immediately, compete directly, and that would have a huge, they will eat into the revenue of Vicom immediately. So they will be highly affected, when new competitor actually come in. And of course, the last one is that the management actually has very, very low stake in the business. Okay, just to share with you guys some of the numbers, the CEO of this company, the CEO of Vicom, he himself owned about $79,000 worth of Vicom share. Okay, he owns about 79,000 worth of Vicom share. So personally, I prefer to invest in a company whereby the management has certain relatively high stake in the business. So they actually want the business to actually perform well, so that their share would actually be worth more. Yeah. So with 79,000, I would say that it is actually quite low for a CEO. So in that sense, that is actually a not so good factor for me. Right. So coming to the final decision. So is this going to be a buy, a BUY, or is this going to be a BYE? Okay. Can y'all share with me your answer first? Okay. Share with me whether is it going to be a BUY or is it going to be a BYE? So for those who are on Facebook, if you think that this is going to be a BUY, can you just put the laughter? Can you just click on the laughter? If you think this is a BYE, can you put the sad face? Can you put a sad face? Okay. If you think this is going to be a buy for you, can you put a laughing face? If you think this is going to be a BYE, can you put in the sad face? And let me see. So on Zoom, okay, pretty much I would say that everybody put a BUY, okay. Okay, there are also some that say do not buy. So it's about 50%, 50-50. Half of them actually say buy, half of them say do not buy. And what about, oh, okay, so Facebook actually more people actually mention BUY. Okay, interesting. Okay, so the answer for me is BYE. Okay, BYE. Okay, let me explain to you guys why. Okay, in fact, just now I have already shared. Okay, I love this company. But right now, based on the current valuation, based on the dividend yield, unfortunately, this is going to be a buy for me. So having said that, it doesn't mean that I will not buy them in the future. If the share price of Vicom actually drops, when the dividend yield is more than 5%, that is where I will be more than happy to actually own this company. So you can actually put this company in your watch list, continue to monitor them, watch out for the dividend yield. When the opportunity comes, go in, okay, go in and grab them. Okay, so that's it for me for this particular series. Okay, again, for people who actually love, the buy or buy series, how you want to find out more, you can join our Telegram, you can follow our YouTube, okay, and you can also like our Facebook page at www.facebook.com/ultimateinvesting. So announcement for everyone. So this coming Sunday, 2 p.m., I will have another buy or buy series on a US company called Disney. Okay, if you want to find out about Disney, the company that we all love, okay, the Disneyland, the Marvels, the Disney Plus, okay, join us Sunday 2 p.m. and I will actually share the buy or buy for Disney. Okay, with that, I'm going to sign off. Okay, thanks everyone for tuning in. Goodbye, stay safe, invest safe, and see you guys next time.